Hey guys, Brian's here. This is the final video in the recap for last week's price action. The day we will be reviewing is Friday, July 19th, 2024. So this day right here. Links to the previous videos for Wednesday, Thursday, and Friday are in the description of this video. I've also already released a video on the outlook for the upcoming week, but I think one of the best ways to get better as a trader is to review the previous day's price action, as you will see that the market will repeat and you'll start to establish patterns for yourself and build some excellent pattern recognition skills. The pattern that I usually like to call out the most is break and retest. So the levels that you guys see on the chart right here, at this point you should know are the gamma exposure levels that are mapped out at the start of the week. This is our breakdown below 554. We had the retest on Friday, failure to reclaim the level, and then price continued to sell off. In the previous videos, we addressed what changed for the markets. We had this gap down here on Wednesday. Price broke down below the significant strike of 560, which means it broke down below the previous day's low and the previous days before that low, which was a change in the characteristics for the uptrend in which we've been seeing. Whenever you see that type of structure being broken, you need to clock that, as that can be a change in sentiment for price action. If this is your first time visiting this YouTube channel, at the start of every week in the Quant Trading App Discord, I like to share some notes for gamma exposure. The levels that you see on the charts come straight from this gamma exposure profile that is built out from Quant Trading App. So this is the levels pre-markets before the week even starts. These levels are mapped out on the chart, and then I kind of set some sort of a framework for myself on how I'm going to approach the week for trading. Everyone has their own approach for how they establish their levels and how they trade. I like to keep it as simple as possible for myself, as well as efficient on time. So that's the levels that you guys are seeing here. We're going to take a look at some gamma exposure levels and something pretty neat later on in this video, so I encourage you to stick around until the end. As we look at Friday's price action in greater detail, what can we spot for ourselves or identify so the next time we see something similar, we'll know how to execute on this type of price action? Let's turn on our studies, and these will include the Quant Trading App scripts, as well as the 2-day anchored VWAP that you guys see right here, the regular intraday VWAP, and some gamma exposure levels that are built into the intraday script. This solid green level that we have at the bottom of the chart right here is the Quant Trading App 2 Sigma level. You guys can see the market essentially came down to this 2 Sigma level and held it. This is pretty common price action we will see whenever price breaks one of the weekly levels. So this is our breakdown. This is a retest of the level, and price cannot reclaim this zone. It generally heads towards the next significant area, which in this case is the 2 Sigma strike. It is a very powerful support level for the S&P 500, as well as the NASDAQ and the IWM. For day traders, instead of looking at things on the 15-minute time frame, I'm going to switch over to the 3-minute time frame, and you guys can see here what is established. In the previous videos, we also addressed identifying some sort of pattern or characteristic for the market. So I'm going to clear all the levels on our chart, and what we talked about was this break of pattern right here. At the start of every day, we had a little bit of an uptrend, and then price broke. So what do we have again? This is our uptrend. Price broke, and then we had selling all day. Price broke, and then we had selling all day. Price broke, and then we had selling all day. That has been the pattern for this current downtrend that has now lasted for 3 days straight. Ironically enough, the time frame for this breakdown has been about 45 minutes or so after the market is open. So as we can see right here, this is the first real breakdown. This occurred around 10:18, 10:15. Right here is when the market broke. Let's check the previous day. Right around here, this was 10:27, 10:30. The previous day here, this was about 10:03. So around 30 minutes to 45 minutes, just around 60 minutes each day. So take that information and pay attention to that for the upcoming week. What's going to happen when the market opens on Monday? Will we see some sort of slight uptrend? And then maybe around 10 a.m., 10:30 Eastern time, will that uptrend break? If it does not break, then we clock that as a break in this 1, 2, 3 day long pattern. That would be the 4th day, and the pattern is not unfolding the same way in which it has previously, and that can mark a shift in the next week's price action, or at least for Monday. In Thursday's recap, that was pointed out, so you apply that same information for Friday. Let's turn on our gamma exposure levels. Here is the retest of 54. Again, key gamma strike that was plotted at the start of the week. And now let's turn back on our studies. And let's see what do we have with price action. Here is our VWAP. Here is our 2-day anchored VWAP. So we have Confluence, the 2-day anchored VWAP dropping, meeting this key gamma strike right as price pushes, it fails, and then it drops right back down. This is an opportunity for a scalp. On a smaller time frame, it's probably easier to spot some sort of confluence. Maybe there's an inverted hammer. On a 3-minute time frame, it's not that clear to see unless you're taking the level blindly. There wasn't, in my opinion, much confirmation to take this trade. We had a little bit of a spike in volume as price met this resistance, but I can't say this is a trade that it would be considered A+ in my book. The safer trade, in my opinion, is the break of this pattern here, as I try to avoid taking any aggressive trades the first 30, sometimes the first 60 minutes of the day anyway. But you guys can see here, here's a little bit more confluence because now price is struggling to reclaim this key gamma strike of 53. Now we have confirmation of VWAP. We know what the trend is for the past few days. It is down. It is matching with the time frame right around when price has been breaking down. We have VWAP. We have the 9 exponential moving average. We're also trading below the 2-day anchored VWAP, so we know who's in control. Price is not too far extended from the 2-day anchored VWAP. Therefore, we can say there's still plenty of room for price to at least revisit the previous day's low. All in all, this becomes the area of significance, and this is where a lot of things converge on each other to actually take the first A+ trade of the day, or the first A+ directional trade of the day, in my opinion. Next clear opportunity, as we can see, price sells off, and we hit the quant trading app intraday zone before we get a micro scalp back up to the 9 exponential moving average. Price ultimately ends up breaking the intraday zone before it reclaims it. It bounces back up to VWAP, thus giving another clear opportunity. At this point, we have an idea of where price wants to go, which would be the 2 sigma strike down here. We'll also take a look at some additional confluences on the SPX later in this video. For now, let's take a look at some other key metrics. We have right here the tick, and what do we have? We want to pay attention to the extremes on the tick. So right around here, this is a minus 1,000 print, and when did that occur? Right around here is that minus 1,000 print, and we can see the market reverses right about here. At this point, what do we have right here? This is around midday, so this is noon, almost a 1,000 print. Where is the SPY? It is touching VWAP. So this 1,000 print right here on the tick coincides with this confluence of VWAP trading in the direction of the trend, and we get a failure to reclaim VWAP. You can use the tick as extra confluence. On top of that, if we take a look at the VIX never really broke down on Friday. So as was mentioned in the videos earlier this week, you generally don't want to take a long trade or a big long trade. When I mean big long trade, I mean setting up some sort of multi-day swing trade to the long side if the VIX is still rising. On Friday, the VIX was still holding its key levels, so I would not put too much risk on the long side yet. If the VIX breaks back down below 15, and then we see it breaking back below this level next week, and it starts getting below 14, then I would have a little bit more confidence in putting on some sort of multi-day, maybe even a 1 week out long swing trade. We are in the midst of earnings season, and during earnings, the VIX has an extra reason to remain elevated, so that can help some of the bears right now. The ES sold off to this key zone here, as discussed in the video that was just released about the outlook for the upcoming week. So I'm just going to skip over the futures for a second. We have similar confluence right here on the NASDAQ. We can see price came right down to this area of high volume nodes on the volume profile. Hopefully from this one screen, you guys can see how much context you can build. We have break and retest right here. We have some confluence with the 2-day anchored VWAP. We have an extra trade with VWAP. We have the tick showing here as a reversal on the 1,000 prints. We have almost a plus 1,000 prints as it's lining up with levels that we already see on our charts. We have the 2 sigma strike, so the SPY stalls out around 2 sigma right as the ES hits a key level, right as the NASDAQ hits a key level, as the VIX is continuing to rise, but it stalls out. It does not go much higher. This one screen alone is jam-packed with a lot of information. It can be overwhelming. Obviously, I'm sharing one of my personal setups, and every time you look at someone else's setup, it can always seem a little confusing, especially if there's a lot of levels on their chart. I want to take a step back and just point out the VIX on a daily time frame. We can see this is one of the larger moves for the year. If we zoom out, this is the start of the year. The VIX has been pretty calm this year. It has not been this calm since 2019. It's been a very low volatile year, so it did break out of its average range for this year. We did have one little bit of a scare here back in April and May. So maybe price goes as high, maybe it doesn't. We don't know. It's not recommended to draw technicals on the VIX, but if we were to try to establish some sort of a trend line here, a technician might say maybe the VIX is going to go up to maybe 1920 before it gets rejected and comes all the way back down to maybe 14 or 15 later in the year. Who knows, but I just wanted to point that out. Here's where things can get pretty interesting, in my opinion. Before we head over to the NASDAQ, I want to take a pit stop on the SPX. The SPX options is actually my preferred instrument to trade, as well as ES options and the futures themselves. This section here is the quant trading app Trade Engine. It is an experimental build right now that is still under development and will likely be under development for the next few years. It is built upon a lot of information and data compressed into one graph with the 0 DTE gamma exposure right beneath it, and it is updating every few minutes and sending out a print. We're going to watch a video for a second with the price action and how it played out on Friday, and as this will be used to demonstrate how key strikes like the Max Payne strike, how the expected ranges and the 1 sigma closes, as well as the expected moves for the day, how all of this information can play out, and how you can establish some sort of targets for your trading. But before we watch the tape on this, let's take a look at the gamma exposure early in the day. I like the planning for trades to be as simple as possible. So in other words, if X happens, Y may happen. If X doesn't happen, Z may happen. In this case here, at the start of the day, so this is about 21 minutes after the market opens, the SPX is below this significant strike of 550. 550 is the absolute gamma strike. It is the Max Payne strike. It is a high negative gamma node. The overall SPX chain is in a negative net gamma environment. We can see that the current price is in negative gamma territory. Just by looking at this graph alone, an experienced gamma exposure trader can interpret this by saying as long as the SPX remains below 550, it's going to want to gravitate towards the high negative gamma nodes. We can see it very early in the day, there's a spike in volume here. It is the highest option volume traded at 500. So 5,500 is something you want to clock, because if price cannot reclaim this, it's probably going to want to head towards this strike. If not this strike, at least 540. And if 540 cannot hold, the next major level will be 515. If 515 breaks, then you have a scalp down to 500. If the SPX can reclaim 550, to the positive side, we have 580. At least 565 would be your first targets. So for a day trader, this would be target number 1. This would be target number 2. Your deep out the money target would be here, which would be 600. So just from taking a glance at this early in the day, if you're trying to structure out how you're going to approach trading, this chart can provide so much context. So let's actually watch the price action play out now. Again, this is coming straight from the SPX data trade engine for the quant trading app Discord here. We're just going to watch the tape back on the price action as it's moving throughout all this. So this is it here, the start of the day. So 5 minutes after the market opens, we already know what the expected move is for the day. It is above average. That's what that AA is standing for. The positive GEX is not that high. It's only 38%. The market is struggling to reclaim 550, which happens to be the Max Payne strike. Max Payne acts as a very strong support and resistance level. So if price is below it and it tries to get back up to it, it can act as a resistance. On top of that, the Max Payne strike is lining up with the absolute gamma strike. That's why we have this dash purple. That is the same information in which we were looking at on this graph here. So let me just get back to that right here. So earlier on in the day, this is the same information here, but this time we're able to see the candlesticks and we're seeing the information on the chart right here, and this is also letting us know this is the highest negative gamma strike. This is letting us know this is the highest volume for puts. So this is the highest put volume strike. So now I'm just going to play this out and let's take a look at price action. It tries to get above that, but it can't. It's struggling to get above the Max Payne strike. On top of that, in the background, you guys will just see this yellow level that's bouncing around. This is a proprietary level developed for quant trading app referred to as the power strike. The power strike is something to take note of for later in the day. The closer and closer we get to power hour, this strike is trying to pick a level in which it thinks the market is going to want to close around. However, whenever the power strike lines up with absolute gamma or Max Payne, it ends up becoming supercharged. So that's why I'm pausing here just to point out that this level is changing. As we continue to play this out, we can also see the absolute gamma strike is moving throughout the day. So pause right here. Absolute gamma has dropped down from 550 down to 500. Then it bounced back up to 550 before dropping back down to 500. Now the absolute gamma strike is also lining up with the power strike. So we have 550, we have 550. The SPX has now dropped from max pain down to the 1 sigma close, which is also about the 1 sigma range. As you know, the market can have a pretty wide range throughout the day, but it might not close that far from where it opens. So if it opens here and then it closes here, the range is from here to here, but the actual change from the open to close is usually more narrow than the range itself. The point of this here is as the SPX reached a level which was the expected move from the open, so the 1 sigma expected move happened to coincide with the area of the 1 sigma close. So this is about on average where the SPX closes on days like this. This is on average what the 1 sigma range happens to be. This area can end up leading as some sort of support, and we can get some sort of reversion back to the mean. Remember, the SPX is also a derivative of the S&P 500. So by analyzing this graph, if we head back to the SPY, we also know what happened right around this time here. So just as we get price action here, we get this reversion back up to VWAP. We get this negative 1,000 print on the tick. We will be taking a look at the Qs to also see if there was confluence there. All these things combining at the same level can sometimes lead to a change. This is letting us know that our delta or our change from the open is 32 points, which we know at the start of the day what the expected move was. That's what this is letting us know on this chart. So I'm going to continue to play this out and let's see what happens. Price ends up bouncing. So for a scalper, from 511 back up to about 530, it's almost a 20-point scalp. That ends up being a really great scalp. So if you're a day trader and you avoid even the morning session and you have some sort of volatile trading day, you can sometimes wait for price to hit areas of multi-confluence. That's what this graph is letting us know. We have one level right here, another level, another level. The SPY, the ES, and the tick are also all hitting areas of confluence. As we continue to play out this tape, let's see what happens. Ultimately, we know that the SPX ends up closing around 500. Let me actually just move this and then rewind it so we can play it back with a little bit more subtle commentary. So we get the bounce. We end up rejecting right at this area here. Ultimately, again, we know where the SPX is likely headed, towards this power strike, which happens to be the absolute gamma strike. Both of these tend to be a magnet. But what do you guys see? Price struggles to go lower. It's not a coincidence that this is where price is struggling. The 500 strike is already a key psychological level for the SPX, but this is letting us know it is a powerful level from a gamma perspective. It is a powerful level straight from the options chain. It is the highest volume on the put side traded for this day. We continue to play it out. I'll just let it run all the way through until the end. And there we have it. You can pause the video right here and just digest this chart for a bit, but I figured it'd be neat to play it out in a video standpoint just so you guys can see. Price reached here, we ended up bouncing. Where did we bounce to? Earlier in the day, there's some confluence here, and there was confluence on the SPY as this was VWAP. Price then rejects. Where does it go towards? It goes towards the power strike, what happens to be the absolute gamma strike, both of which usually act as some sort of a magnet. Where does price retrace to? It tries to bounce back up, comes back to the 1 sigma range before coming back down to 500, then bouncing back up to the 1 sigma close. So another level that ends up acting as a significant level before rejecting and coming back down and closing right within the area of the power strike as well as the absolute gamma strike, which is also the highest negative gamma and also the highest put traded. That might have been a lot to digest, but that's why I started just with this profile here. To a person with a lot of experience looking at a gamma profile chart, this is very early in the day. You can already digest if price breaks down here, where is it going to head towards? Where is it going to probably bounce back up? If it rejects here, where is it going to want to go back down? Quant Trading App has almost 2 years of this information archived in its databases, as well as the graphs that have been sent to the Discord. There's the Gamma Exposure Archive page on Quant Trading App in which you can look up previous dates and actually build confidence, not only reading Gamma Exposure, but starting to understand at the start of the day what is likely going to happen and come up with a game plan for yourself. Now let's move on to the Qs to wrap up this video. QQQ. Let's make this full screen right here. What do we have in the Qs? 480 was addressed multiple times this week. Here we have it. The Qs failed to reclaim 480. Let's turn off everything off of our chart. Look at clean price action. Let's actually just drop the 480 just so we see. Here's our general area. This is the 15-minute time frame. There's been no solid close above the 480 strike. Rejection, 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 rejection. None of this will build confidence for a bull. If any one of these 15-minute candles closed over 480, that would have built some sort of confidence, as it would have allowed VWAP, so let's head to the 3-minute time frame, to rise above 480. VWAP, which is this light gray level, I'll actually make it a little bit more significant for you guys, or a little bit stronger. Let's make it pure white. So this is VWAP. VWAP was never able to rise and hold above 480. If VWAP got above 480 and there was a 15-minute candle close above 480, that could have triggered some confidence for bulls to start buying on the ask. That would have scared bears. They would have started closing out their orders, which could have resulted in an afternoon rally. This is the area for price to get and hold above. Because it could not, we got the opposite, or we got the reverse. Price headed to the next powerful option strike, which was 475. Similar with the SPY or the SPX or the ES, we had the break right around that 10:15, 10:30 mark. Price broke down, retrace, could not reclaim VWAP. 479 was the highest negative gamma strike from pre-market. So this is coming straight from the quant trading app script. Again, if I were to just turn these off, you see all these levels are drawn straight from the intraday script, minus this 480 level that I just drew. So I'm just going to delete that. So this is Confluence right here. It's VWAP, high negative gamma strike, failure to reclaim it, price ends up selling off. For today's recap, I wanted to spend more time on the SPY and the SPX, as the previous two videos left the SPX out of the equation. The SPX is a great additional confluence level for the SPY. So I like to look at the SPY and the SPX in tandem. It's just tech has been a hot story for this week, and that's why I included more of the Qs than you would normally see on this channel. But to round out your trading, you want to be able to look at the SPY, the SPX, the Qs, the IWM, and the futures. If you can get really good at just balancing, looking between these charts themselves, you will be able to be a pretty well-rounded trader when analyzing the broader market, and in conjunction with things like the ADD and the tick. The ADD failed to reclaim zero the same time the SPY and the NASDAQ broke down. Where did the ADD hit? Negative 1,000, right around the same time the tick hit negative 1,000, right around the same time the market bounced. Guys, if you're enjoying the recaps, let me know in the comments down below, either in the Quant Trading app Discord or in the YouTube video down below, and I will keep these videos coming. Link to the Quant Trading app Discord is in the description down below. Fall is going to be an interesting time for trading, as it is the general election. So I want to put as many of these videos out to get you guys prepared with understanding not only how I approach the market or how I interpret the market, but how you can simplify things for yourself. You can come up with better planning for yourself. And I want to keep emphasizing the break and retest. If it is the only thing you know is waiting for price to break down below a level, let it retrace to a key gamma level. It can be a high open interest level. As if VWAP is at that level and price retraces to it, more than half of the time, you're going to have yourself a really good trade. If I were to let's turn off this weekly level here. So the only thing on the chart is the gamma level. I'm actually going to turn off these quant trading app zones, so we don't have these as a distraction. We're just looking at the VWAPs and the gamma levels. Look at how clean that is. Price breaks down below a gamma strike we marked off at the start of the week. It retraces. The 2-day anchored VWAP is right there. We know what the current sentiment and trend is for the week. We have all this other additional confluence levels. We have an extra negative gamma strike for today of 53. That's what this red level is on our charts. We have VWAP, the intraday VWAP. We have the 2-day anchor VWAP. If you are shorting in this area, you're feeling good. Your stop loss above 54. Maybe your stop loss is above this pivot area here. Quant Trading app members know 2 targets, 2 sigma. You generally don't want to hold a short trade past 2 sigma, or at least I definitely don't do that. Doesn't matter how low the market goes below 2 sigma, I will look for the retracement back up to 2 sigma. Check out the video I released just before this one if you want to see some of my thoughts for the upcoming week, as this video is mostly focused on reviewing and wrapping up last week's price action. Thanks again for watching, guys. Like the video, share it if you learned something, and I'll catch you on the next one.